Hello everyone, this is Amit Kumar Singh. Welcome to my class on derivatives. So when we talk about derivatives, derivative is very important for all the students who are preparing for CA final exam. It is very important for all the students who are in final year of the MBA finance specialization. And derivatives as a subject, as a topic, is considered as one of the very difficult topic in finance and in mathematics. So when we talk about derivatives, the word derivatives basically derive from the word called derivatives. So something which is deriving its value. So in finance, when we talk about this term called derivative, so the derivatives basically is a financial instrument which is not real. Real in the sense there's no assets which is known as derivatives, but what are derivatives? They are such kind of financial instruments which are deriving their value from some instruments which from those assets which are already existing in the financial world. Those assets were called as underlying assets. So when you talk about derivatives, derivatives can be financial derivatives, it can be currency derivatives, it can be commodity derivatives, it can be interest rate derivatives. So it all depends upon its underlying assets. If the underlying assets is a financial asset, it is called as financial derivative. If the underlying asset is a currency, it is called as currency derivative. If the underlying asset is a commodity, it is called as commodity derivative. If the underlying asset is a bond or debenture, it is called interest rate derivative. So when we look into the world of derivatives, when we look into the financial market, where I can talk about the current civilization, what we are going through. So after industrial revolution, the next revolution what we are going through is derivative revolution. At present, if I talk about the total volume of trading of derivatives, so it has crossed more than $30,000 billion, which is more than 100 times of the GDP of the India. So you can understand the complexity, or you can understand how much volumes of transactions are happening in the current financial market. So when you talk about derivatives, question can come to our mind: why derivatives has become such a big traded instrument? Why so many traders and why so many people are so much concerned about derivatives? Even in the stock market also, when you trade in stock market, you would have heard of the term called futures and options. So futures and options are the form of derivative instrument. So as the time progressed, and when we talked about the scenario after industrial revolution, when liberalization, privatization, globalization have spreaded all over the world, when the international business become more and more complicated, and when a single event in any part of the world affected the all over the world, so there was a need of a kind of financial instrument which can ensure or which can hedge my future uncertainty. The risk has become more. So when what is risk? Risk is the uncertainty. More is the uncertainty, more is the demand for the insurance of that uncertainty. So that insurance of that uncertainty in the financial world has come from a solution called derivatives. So when we talk about derivatives, the emergence of derivatives have spreaded all over the world. Now when we talk about the trading market, in the trading market, derivatives have become one of the very prominent instrument when we look into the trading domain. When we look into the history of derivative, when the derivatives have actually started trading, so no one actually knows the derivatives when the people have started using derivatives. Primarily derivatives was the part of commodity market. So basically farmers and traders, they used to engage in derivative transaction to hedge the future uncertainty of the underlying asset. So when we look into derivative as a history, so derivative was existent only in commodity market, and the instrument of derivative which was very prominent in that time, that was forward contract. So when we talked about derivative, the derivative was initially was there in the form of forward contract, where forward contract is basically, it is a OTC based custom designed bilateral trade agreement between the two parties, which talks about a transaction what they will do in the future. So from last, I believe from last 4 minutes, I'm talking about derivatives. I'm talking about derivative, why derivatives become such a prominent instrument. So I believe you would have understood one thing, that derivative is the solution of uncertainty in the financial market. So I believe you would have understood this term by this time. The next thing you need to understand, that question which would be coming to your mind, what is derivatives all about? So I believe everyone want to ask me this question, what derivative is all about. So when we talk about derivative as an instrument, so derivative is a basically is a financial instrument where the two people come in picture. The one person who act like a buyer in the future and the other person who act like a seller in the future. Both these people come together and they talk about a transaction which they will do in the future based on the present determined condition. This is called as derivative. So when we talk about derivatives is basically it's a financial instrument where the two people, one person who act like a buyer in the future, that person is called a long position holder, and one person who act like a seller in the future, that person is called short position holder. Both the person come together and they talk about a transaction which they will do in the future but at the present determined condition. So they decide the price at which they will do the transaction, they decide the quantity at which they will do the transaction, they decide the date on which they will do the transaction. So it's all about fixing a price. It's a fixing of the price of the underlying asset on which I will do the transaction in the future. Now the question arises why we need to think about that part. Think like as a farmer. So suppose you are a farmer and you are growing, maybe you're growing potato. So every time when you reach the with your potato in the market, what you found that the price of potato has fallen down to the price at which you have produced the potato. Maybe the cost of producing potato, when you talk about the cost, so maybe the cost of producing potato, when you talk about, so maybe the cost of producing potato is suppose 10 rupees per kg. So this is the minimum cost what you incurred to produce the potato, so 10 rupees per kg. And now if you able to sell this potato anything above the 10 rupees per kg, you will end up in getting a profit. So what you saw, just think about a scenario. So what you saw the market where there's a lot of demand of the potato. So you saw a market where there's a lot of demand of the potato, but when your potato got ready, once your cultivation and everything is done, so when you reach to the market with those potato, you saw now there's no demand. Now the market is over flooded with the potato. So what happened? The time when you realize there's a demand of the potato, at the time when you can sell the potato at any price, maybe there's demand more than the supply. So that time you realize this value, but the time after some future time when you potato got ready and you reach to the market, you saw now it's over flooded with potato. So what happens in our day-to-day life, we may or may not will able to anticipate the future change in the price. So because of change in demand and supply, either you as a farmer you will get affect, maybe because of oversupply, or maybe as a trader, maybe I'm some chip manufacturing company, so which I makes potato chips, and the time when I need to make chips, I need potato. When I reach to the market to buy potato, I saw the price of potato is very high. So as a normal individual, we all get affected because of the uncertainty in the change in the price of the underlying asset which we want to consume. So derivative is the solution of this problem. I hope you have understood what I have discussed till now. I'll continue more on the same part of derivative to make you understand derivative in the next class. So thank you for listening. Take care.